And George had made a prediction yesterday that he thought unemployment was going to go to 10%.
People just laying people off left and right. If you read in my books, I was saying one of the silliest things. People, you go to school, get a job, you save money, pay taxes, stay out of debt, and learn nothing. Invest in the stock market. And what they don't pay attention to is not the stock market, but the bond market. And right now, Moody's, we don't know what Moody's is. Moody's is a credit rating agency that downgraded the U.S. debt from AAA to double. So the richest nation in the world is going broke, called America. And when the credit agency says your debt's no good, that means your bonds are no good. And the question is, what does that mean?
For me, it's already starting because the people outside of the U.S. that are holding U.S. treasuries or U.S. money, there's more money outside of the U.S. than there is inside. They're all looking at our dollars. And now that it's downgraded even more, that's why we're seeing a flight to other kinds of hard assets.
And we've been saying this for years and years and years and years and years. And still these mental midgets out there save dollars. And you're saving dollars while the Federal Reserve Bank and the Treasury are printing dollars. And there's two things that happen when you print money. Number one, the rich get richer because all this fake money enters the system and pushes up asset prices like real estate and gold, silver, oil. And then number two that happens is the poor and middle class get poorer because what else gets more expensive is inflation of chicken, eggs, and milk. McDonald's is having trouble. The French fry factory went out of business. But the people can't even afford McDonald's today. And yet our schools teach us nothing about money.
Well, it's important because what we're starting to see is there's disruption, obviously, with the new president, tariffs, with inflation, and being out of the country. When it looks at the U.S., they look at U.S. very differently. So, for example, when I was in Italy, $100 only bought like 83 euros. A year ago, that was 96 euros. So if you're holding U.S. dollars, you're actually falling backwards.
If you're a saver of dollars or yen or pesos or euro, you're losing because it's fake money. One more thing. The question is, how does it affect me? So people can't afford to eat, or they're having a harder time just getting fired, but they also can't afford a house. And my generation, the boomer generation, is when there's inflation, their retirement disappears. So the boomer generation is going to get wiped out financially because all that stupid money in 401ks like stocks, bonds, mutual funds, and ETFs, you're going to get inflated out of the market. It's going to just eat it alive. So the boomers are in serious trouble, but they're out playing golf now while Kenny's flying in from Europe and I'm flying in from Africa so we can study. We're not teaching, we come to study, right?
Yeah, we come to study, but I think the worst thing that you can do is hold on to a savings account because whatever you had buys less today, a lot less. And so you have that happening as prices continue to rise.
So that's why for years, since 1965, I've been saving silver. Because in 1965, when you look at a U.S. silver $50, it was copper. So that's called Gresham's Law. Gresham's Law states when bad money enters the system, good money goes into hiding. So in 1965, I was just 18 years old. I didn't know anything. I looked at this coin and said, why is it copper? It's supposed to be silver. And when you study history, they've done it through, the Chinese tried it, the Romans tried it, they clip money and all this. The Germans tried it, and now America's trying it. So let me say it again. My generation, you guys are screwed. If you're saving, you're holding on to savings, you're in serious, serious trouble because you won't be able to eat. That's the problem. Well, we study constantly.
Yeah, this book here we're both reading while we're on vacation.
Yeah, by Lawrence Lepard, The Big Print, is the national debt is so high that eventually they're just going to start to print uncontrollably. And when you print uncontrollably, the dollar goes down in value. Chickens go up in price, eggs go up in price, everything goes up. And inflation, I said, makes guys like us richer, but the poor and middle class, the uneducated college degree, like my poor dad, a PhD, and still go broke because the schools teach us nothing about money. Yeah. And so they're going to start printing now because the national debt is 36 trillion, going up by 2 trillion every year. We can't pay it off. The interest payments on our debt is greater than the tax revenue we pull in. So that's like you, Mr. Mom and Pop, and your credit card debt's going up, and then you're trying to pay it off with another credit card. That's what America's trying to do. That's how stupid our leaders are.
And it's just continuing to get worse. Hopefully you guys realize that if you bought real estate or gold even 5 years ago, 10 years ago, you're actually in a much better position than you were if you were just holding cash. And so you don't have to start, you don't have to go huge, you just got to start.
Gold is near all-time highs, but appreciation isn't the only way to benefit. Monetary Metals, you could potentially earn a yield on your gold, paid in physical gold, without selling it. Here's how it works. When you lease your gold through their platform, pre-qualified companies pay to use it under strict guidelines, like renting out real estate, but with gold. Instead of paying to store your metal, you may earn up to 4% annually in gold. You stay in control and you can choose which leases to participate in. Monetary Metals handles the due diligence, lease terms, and all the administration. Thousands of investors use this approach to grow their gold, not just sit on it. Visit monetary-metals.com/Ken to learn more. Leasing gold involves risk and returns are not guaranteed. This is not an offer to buy or sell securities. Please review all risk disclosures at monetary-metals.com. Visit monetary-metals.com/Ken to learn more.
And the greatest thing is that you can get the money from everywhere else. You don't actually need money to start in this business. You just need a good deal. People invest in deals, and then you use debt, which is really other people's money. The money from the banks is actually your money. That's where it comes from, in the form of deposits. And then they lend it back out to people like us. And that's how the system works. It comes in through insurance policies, through pensions, through retirement plans, through savings or whatever it is, through Main Street. And then Wall Street packages it up, charges fees, and then gives it to us to reinvest back into Main Street. That is the system.
Schools teach us nothing about this, and so the rich get richer. But schools don't tell you the U.S. dollar is debt. U.S. dollar and most fiat currencies, fake currencies, became debt in 1971. People like friend Dave Ramsey say live debt-free. There's a difference between good debt and bad debt. And so what Kenny's talking about, we use good debt to buy assets like real estate. But the average person is using bad debt, like credit card debt, to buy chicken, eggs, and milk. And they're getting crushed right now.
So we use debt when other people pay it off. That's actually when you use debt. So most people use debt to go buy, let's say, a new car or something like that. And they finance that, or they use it for other things. We use it to buy assets, but only if somebody pays it off. So like, for example, we own a bunch of apartment houses. And so we use debt to buy those apartment houses, and then the tenants pay that debt off. They pay it through the form of rent. So it comes in the form of revenue. And then it pays the expenses, the operating expenses, utilities, insurance, and property taxes, all that stuff. But it also pays off the debt. So the tenants actually pay the debt off that we borrow. So what happens is our principal balance on the debt goes down because the tenants pay it down. And the inflation makes the property itself go up over time, just like it has in your individual home. If you've owned a home and you've owned it for 10 years, or your parents' home, or whatever it is, that home is worth more today than it was 10 years ago. You know, we have millions of dollars in that kind of real estate. Our real estate has also jumped up just like it has in an individual home.
The point here is this, is that don't just jump in and buy real estate. You know, you've got to study. Again, let me repeat it, because this is how much we study. He just flies in from Italy. I fly in from South Africa. We all study this book here. We're studying constantly. And the average person right now is playing golf or watching Jeopardy on TV or something. But real estate is very sophisticated. I mean, if you screw up there, you screw up for a long time. Like if you borrow too much money and the real estate can't pay it off, they call those things alligators. You buy an apartment house and let's say you can't fill it up, then your debt, your asset eats you alive. So that's why please study. Kenny has great books on real estate. The reason you invest in real estate and you use debt is you don't pay tax, like President Trump doesn't pay tax. So understand, this is financial education. It's an interesting time because the rich are getting richer and richer and richer. My concern are the people who are getting laid off right now. I think Microsoft has laid off 10,000 people. Amazon's laying off people. McDonald's is shutting down because people can't afford to eat.
And what's interesting is where we just came from, like I came from Europe, they're complaining about the same thing we're complaining about in the U.S. What's happening there? Unemployment's going up. Inflation's going up. Energy's going up. So This is not just something that's happening in the United States. So when we go somewhere else, anywhere that has a central bank like we have, just prints. They print to pay for things.
Right.
And that's what's happening. They print to pay for Social Security or retirement plans or whatever it might be, or Medicare or Medicaid. That all is being printed to be able to pay out. That's just more debt.
That's why the biggest print is still coming. And again, I'll say this much. When you print money, there's inflation because too much money enters the system. Kenny and I will get richer because we have hard assets, gold, silver, we have land, we have this and all this. But the average person, chicken, eggs, and milk goes up too for them, and they get wiped out. And my concern is my generation, the boomer generation, they don't have enough money to fight inflation. Their 401ks aren't going to hold. The stock market's crashing like right now, which I predicted. But more dangerous than the stock market is the bond market. The bond market is 1,000 times bigger than the stock market. The bond market is crashing because, as we just said, Moody's just downgraded the U.S. bonds. When they did that, they said America is a deadbeat nation. They can't pay their bills. And our schools will still teach you, go to school, get a job, save money, stay out of debt, and invest in the stock market. Man, what is wrong with our school system? It's horrifying. America's bankrupt. So that's why Moody's downgraded our debt. And still these financial planners, these mental midgets out there say, it's called a 60-40, 60% stocks, 40% bonds. Both are crashing, idiots. Oh, don't worry, you're safe. There's no such thing as safe. It's being smart, but it's not safe. So that's why for years, Kenny knows I've been saving silver and gold. I just bought a new house. My gold was stored someplace else, because you don't want to keep it at your house and tell people you got gold at your house because people come visit you.
Yeah, they'll come visit, yeah. So it's out of the country.
Yeah. So I only paid $300 an ounce for this gold. And it's gone up to $3,500 an ounce. It went up 10 times. So I thought to myself, I said, I have so much of it, I could never eat it all. So I just said, well, I just cashed it in. And I got lots more. But I just wrote a check for the house. I don't have debt on the house. But I did it because it was not a big house, but 4.5 million US. I figured it out. It only cost me $450,000. Because the gold only cost me $450,000, but at 10 times went to 4.5 million. I write a check for it. I have a tax problem. We got to pay for the capital gains. But that's what happens when I save gold and silver and Bitcoin. We save things that go up in value when the dollar comes down.
So the difference is gold is universal. It's worldwide. It's God's money. So every country uses it, and as opposed to U.S. dollars, where we can kind of manipulate it. So what's happening when the dollar got weak here recently, it's at a 3-year low. People, they gravitated to things outside of the U.S. dollar. So that's kind of why right now we're seeing a run on gold.
So ladies and gentlemen, we've gone on it long enough. The point is that Kenny and I study. The reason we're rich is because we study.
Yeah.
And some of you may know, I've had some terrible problems inside my own company because people refuse to study. So I just shut the company down. Found out I didn't need them. Too bad. But I study constantly. I don't want to keep people collecting a paycheck and saying, oh, you owe me more money. That's not the same world. This is not your daddy's world anymore. So again, I can pay all this stuff off because I don't save dollars. I use debt to acquire assets that produce money.
And we both believe, especially with these tariffs and everything that's heading with the printing, that we're going to see inflation. So whatever it is you do, you just have to be in inflation-adjusted assets. That doesn't matter what it is. You just have to be in those things so that you're moving faster than inflation's moving.
It's almost by definition, if there's inflation, assets go up.
Yeah.
And liabilities also go up, but got no difference between assets and liabilities.
But if you're in cash, you're actually going the wrong way. As many of you know, we have this great conference called Limitless. This year, it's at the Gaylord Texan again on July 30th, August 1st, and August 2nd. We have 50 speakers. And this book here, this is going to be one of the books, because by that time, we'll both have read this book. Yeah. We'll be studying this book. We have great people like Jim Rickards.
Oh man, Jim Rickards! I call him the fire hose.
Yeah.
I've never met a guy who had so much knowledge coming out. He doesn't even take time to think; it just comes out.
He's so smart. Yeah. Right. And he wrote a phenomenal book that I read. Gosh, it's been 10, 15 years ago, called Currency Wars, which is exactly what's happening right now.
Causing this today.
We're paying other people in the U.S. currency and they don't want it. They're trying to get out of U.S. currency right now. On July 31st, August 1st, and August 2nd.
Is there room for it yet?
Yeah. We actually have a price increase at the end of each month. In July, you'll be paying full boat. So if you buy a ticket before July 1st, then you're going to get some premium reductions in the pricing. But after July 1st, all bets are off. You're paying full boat. 50 speakers, 3 stages, 2.5 days, all financial education. We expect around 2,000 people. That's what we've had for the last 3 years. And we are going to cover things like the new tax bill, which is huge. What are the things that you can do today to take advantage of these new tax bills that are coming out right now? We're going to talk about manufacturing. We're going to bring in some real businesses that are actually struggling with these new Chinese tariffs, right? So they can talk about it from the street and not from, the tweets that we're getting from the White House. And we're going to talk about crypto. We're going to talk about gold and silver. We're going to talk about, of course, all the real estate stuff, but also just basic entrepreneurial things around inflation, the interest rates, and all the things about starting businesses. And I'm telling you, like what we're starting to see on Main Street right now, Robert, as you know, is people now today, they have to have 2 and 3 jobs just to stay alive.
There's a thing. We were driving with Uber last night. The guy was falling asleep driving. He'd been driving for like 14 hours.
Yeah.
He can't make ends meet. So he's trying to keep his family alive. He's just driving harder. And it's going to kill us. But I feel, hey, wake up.
Yeah, and what's worse is, as you guys know, AI is eliminating jobs. Waymo's in Phoenix right now. I can never get an Uber because Waymo has taken over. And I got an Uber, and I said, "Why aren't you coming to this area anymore?" So this Uber driver, he goes, "We can't make any money. Our margins, we can't charge what Waymo's charging." So those are automated vehicles with nobody in them.
What they hit, this is interesting, they hit 10 million miles in Phoenix alone in Waymo, and now they're going to spread throughout the world.
So the drivers, the Uber drivers, that used to be like a side hustle, that's all starting to go away as well.
Main reason you come to these events is thousands of people come to stimulate your brain, meet more positive, proactive people who are looking for new answers. They're not going back to college to get their master's degree where you learn nothing. But you come to these events, meet like-minded people, meet new friends, you get to talk to different people and get your brain stimulated. 50 instructors. That's an unheard of. That's a big event.
And they're not paid speakers. These are actual people that are really doing their own businesses.
If you send your kids back to school, you got the village idiot coming up, you know what I mean? That cartoon I sent out with these 2 young girls that said, "How far do you go at 70 miles an hour?"
Which, by the way, if you could bring your kids under 18 for free, like that's another thing that we're doing. It's like, come, bring your kids. They need to be in those same kinds of rooms with people that are actually moving the needle, people that are producing and not just consuming.
How much does it cost?
It's about $1,000 for a general admission, but right now it's discounted. So if you just go to limitlessexpo.com, you'll see the current pricing. And then the VIPs a little bit more. It's 2.5 days. The VIPs get all access. They get food. They get all access means that they can talk to all the speakers. All the speakers will be in the rooms. And of course, they'll have preferred seating each and every day.
Why do I go? They're not paying me. I go there to learn. Learning is fun. And a lot of people do, my company said, "You're forcing me to learn." I said, "It's not a bad idea." So I said, "Well, if you don't want to learn, let's just move on because we're going to move on anyway."
The more you learn, the more you earn. That's a fact. And I'm telling you, oh my gosh, we got some smart people in there. George Gammon, Mike Maloney, Daniel Samuelson, Robert, and Russ Gray, all on one panel with a room of about 50 people. It was awesome.
And it's how I used AI to get rich in gold. Most people know I'm the village idiot when it comes to technology, but I didn't use the AI, my team did. So the future is very, very bright, but not for people who are living in yesterday.
No, you're falling backwards. You just don't see it.
So if you can make it to Limitless, please do in Dallas. I love the Gaylord Hotel.
Yeah, it's great.
Yeah,
it's perfectly set up for conferences.
Yeah, and you get to meet great people, hang out, get to talk to them and make new friends and learn from different, and like Kenny says, all the instructors practice what they teach.
And if you think you're confused, you're not alone. I'm telling you that is the truth. People come here for answers. It's confusing right now. We're all here, even this weekend, with varying opinions on what we think is going to happen in the next year or two. We all have different opinions, but when you can speak openly and debate on them, that's when you learn and your viewpoints change, hopefully, and you can fine tune some strategies moving forward. That is the point of Limitless.
And you meet other people who are doing the same as you. Some people meet new partners, not sexually, but financially.
Business partners.
Business partners. But you come to meet people, and that's what it is for, because the people who are not there, in my opinion, are falling behind. They're still sending their kids back to get their master's degree. How stupid is that? And they're saving money, and they think debt is bad, and they love paying taxes. You've got to be an idiot to be thinking that. Anyway,
Yeah.
thank you. We'll see you at the Limitless.